Hey everybody, Brian Shannon here from AlphaTrends.net. Today is Friday. It's the 7th of November, 2014. Let's go ahead and take a look at these closing numbers for the week. We had a little bit of weakness here today. Semiconductors down about 1%, but for the week they still managed a gain of 0.25%. 0.75% for the S&P 500. Oil was down another 2.5%, and gold, with its $3 rally today, put it back to positive for the week, up a little less than 0.5%. So kind of flat to mixed market this week. The S&P 500 obviously still remains in a giant uptrend here that began after that shakeout, very strong shakeout. I think that going forward next week, we're still innocent till proven guilty. We're above this rising 5-day moving average, and there's no reason to be short this market right now. If you are, you're fighting the intermediate term trend as well as the primary trend. We have, this kind of represents the essence of the trend right here, and you can see that trend line may be starting to break, but a trend line break doesn't mean it's going to fail. I think that the important level will be down here closer to 200 next week, and if we drop down below, maybe we come down to 200, find resistance at a 5-day moving average, then perhaps it's a opportunity for the short side. But right now, the way we're looking at it, it remains innocent till proven guilty. If you're going to be trading short, you only do so on the very shortest period of times intraday, and you can see even here today, we spent a very short period of time below the volume weighted average price before a nice little spike here at the close, and that's a all-time high for the S&P 500. So you have to be very impressed with the resilience of this market here. The Nasdaq didn't close at an all-time high, but we did see a slight loss here of 9 pennies today, and this is going to be the important level, really. That's where we have the 10-day moving average, we have the prior resistance, and we have support from this week. So realistically, it's looking like the round number of 100 down to about let's say 199.75 to 100 and a quarter is our important band of support. You can see that the 5-day moving average here is turning sideways a little bit. That's indicating that maybe we're getting a little distribution. It doesn't necessarily mean the market has to decline. We could correct through time rather than price, and we can see that the trend line was broken earlier this week, and that didn't lead to any type of pullback whatsoever. When that trend line was broke, we're actually above that level. So again, only price pays. You have to listen to the message of the market, and it tells us that the buyers remain in control. For the Russell 2000, we kind of were a little flattish this week as well. The 115 and a quarter, I think, is going to be the first near-term level of significance next week. And I want to talk about the weekly chart of this for a moment, because we previously mentioned that it was looking like it was stage 4 decline over here, but as it rallied back up, it turned into a bear trap. Now that, for people who are trading gold, I think this is their best possible scenario, is that gold is still broken. It's clearly in a downtrend. There's no reason to be long gold right now. It's broken important support after these lower highs. So realistically, looking at a descending triangle, the best case scenario, I suppose, would be is if gold can get back up above, probably about, I think you'd have to call it safe, maybe back above about 115 or so. If it got back above 115, then I think it could be similar, that we could see maybe a little bit of a, that would have been a shakeout, and from a failed move would come a fast move higher. So if you're a gold trader, that's something to be aware of. I wouldn't get too excited about one day's $3 gain when we've seen that this market, it's still down year to date, and the multi-year trend is clearly still lower here for gold. Back to equities, though, in the Russell 2000, this is going to be, down near about 115 is going to be our more important level for this market to hold next week. As long as we remain above these levels, it's innocent till proven guilty, meaning we're expecting to see continued higher prices. There's no reason to fight it. That's not a hindsight, that's foresight. We're talking about a trend continuation if we continue to hold up above these key levels. The semiconductors came down to test some important support near 51, and we are below the 5-day moving average here. So that just gives us a little bit more reason for caution. We still have a clear uptrend here, so we came down to that trend line in this prior support. I think, though, that a little bit deeper pullback in the semiconductors, even down towards that 50-day moving average, wouldn't be a bad thing. It would help to bring this market down and show a little bit of a correction that perhaps then we would find some support for a purchase. The financials did close at a new high here today, up 1 penny, and that's a multi-year high, of course not an all-time high, but the longer-term uptrend and the intermediate-term uptrend are still clearly intact. Higher highs and higher lows above the rising 5-day moving average means that, again, a trend once established is more likely to continue than reverse. So the people who are trying to sell it short and pick a top are clearly doing it wrong. Don't listen to people who are saying it's a top because of an overbought oscillator or whatever. Look instead at what the market is saying. This prior resistance at 24 held as support here, so that's our first important level for next week that we're going to want to keep an eye on. And of course, we have the highs from what were the highs earlier in the year, just below that at about 23.90. So 23.90 to 24, I think, is the key level for the financials next week. And if they get below that, then we want to become a lot more defensive. But right now, there's nothing indicating they will. So we already covered gold. It's clearly still in a downtrend. It broke the 5-day moving average, but the 5-day moving average is, still heading lower, and we've got a much bigger problem on our hands with these longer-term charts. So no reason to be long gold. The dollar pulled back just a little bit today, but still in a real powerful uptrend here. It consolidated through time a little bit. It didn't really get much of a price correction, and that occurred for the U.S. dollar index right at, and I don't know why I only have 100 or so weeks on this chart. Let me just change that so we can see it a little bit more clearly. This prior resistance, we've now broken through that, and it looks like the U.S. dollar index is headed probably towards about 23.5 or so. So that trend remains intact. A slight pullback to the 5-day moving average today. Nothing to be concerned about. Bonds were up a little bit, and again, a couple weeks ago we saw this massive rally, kind of a blow-off top there, and it's correcting, but it's really doing so begrudgingly and still above this 50-day moving average. So I think we're starting to see that the buyers are regaining control somewhat in the 20-year bond index. So that's something to keep an eye on. If it breaks below probably 118, then I would think maybe that we're going to see a deeper pullback, but that's where we have that rising 50-day moving average as well. So I don't think it's very likely, but it's just something that you do want to be aware of course. Let's take a look at oil, because oil here on a weekly chart, you can see for some reason how come the scaling isn't showing. Let me pull this over so we can see the price scaling. But we're at $75 a barrel basically, or is that 78 on West Texas Intermediate, and that's down from $108 a barrel just back in June. So big decline, and it's into this level where we saw support in 2011, then again in 2012. So this has been quite a precipitous decline in oil, and looking at the prior big declines like this, it is into a potential level of support. But when we look down at shorter term time frames, you can see that it's clearly damaged, that this support near about 80 is we're still below that. So it's still in a primary downtrend on oil. So as much as it's tempting to look at these things and say they're down too much as far as gold or oil or whatever, there's no reason clearly to buy it yet. A couple of weeks ago I pointed out a buy that I had made in Bitcoin right over here at about, I think it was 318. I'd sold half of it up near, I think, 372 and then 405-ish. And this the Bitcoin is pulled back a little bit, and some people like me to talk about this. So once in a while when I see an opportunity, I'm not going to cover Bitcoin all the time, but when I see an opportunity potentially emerging, then I'll point it out. We've got this downtrend in Bitcoin that's been here since, what is this, I guess August, and it's come down quite strong from 600 down to 280 or so. And this trend line, I think what we're seeing right now is we had this big washout volume here, and now we've got what is potentially a higher low. If we can get back above probably 352, 353, I think you could buy Bitcoin with a stop probably of risk of about $20, and it seems to me like it should be heading back up towards about 450 or so. anyways, let's go back to the equities here and close this out for the week. Apple did hold on to its gains for the most part here. You can see that the 5-day moving average is flattening out, and support really right now is at 108. If it breaks below 108, perhaps we get a little bit deeper pullback. So just be aware of what you want to do with a position if you're long Apple. Alibaba continued to move nicely higher here, and this is the one that again I'd pointed out on Yahoo Finance and on StockTwits. I had posted several charts saying that getting back above the volume weighted average price year to date would put the buyers back in control and head this, see the stock head up towards 100 to 110. Well, we're clearly well past that, and you can see now that we've been riding this rising 5-day moving average. So Alibaba is still in a very strong uptrend and innocent until proven guilty, whereas a stock like Twitter is, it's broken right now. It's you've got to stay away from Twitter. Don't be trying to find a bottom just because we're closing a gap or whatever it is. The momentum is lower. We're below declining moving averages, and there's just no reason to own it. Very similar to IBM. People look at IBM and say it's the blue chip stock and all that, but when it gapped down here, people thought they were getting a bargain on that day, but it's continued lower, and it still continues lower here. So IBM is one that you also want to stay away from as far from the long side. There's just we've got this big top in here, and there's no reason to be a buyer of it. Tesla reported earnings this week, and the response was really kind of muted, I'd say. I mean, we this was the response basically. So they reported was it Thursday after the close, Wednesday after the close, the 2-day volume weighted average price. So the volume weighted average price since the event is 241, meaning the average person who bought after earnings is losing money. And when you look at the daily chart of Tesla, we're seeing we've got a downtrend, we've got the lower highs and lower lows, we've got a declining 50-day moving average, but we're also holding above the volume weighted average price year to date at about 220. So I just don't see a lot of opportunity here in Tesla. It's a great day trading stock, of course, but right now I don't see a lot of reason to be involved in there. I would keep an eye on Taser next week. That's holding up here after a big volume move. That it's making a nice tight consolidation. And looking at the weekly chart, it's up to an important level that if it can break, I'd say probably going to have to clear 19. So we've got a little bit of a band of resistance between 1875 to 19 bucks a share. If we can get above that and hold above it, I think that you could probably purchase the stock with a stop near about 18 and a quarter and look for this one to continue to move higher. And Plug Power is kind of one that a lot of people talk about. It's looking better. It's got big volume in here recently, and it's got a nice little consolidation above a rising 5-day moving average. The issues I have with this stock are, one, it's got the volume weighted average price year to date just ahead here, and this has been a big prior band of trading in here as well. So just be aware of the personality of the stock as well. I mean, this Plug Power, it gets a lot of attention, but it has these huge rallies, and understand the personality of the stock is it has these big rallies and then it fails miserably. So I mentioned this because there was a lot of discussion about it and people were asking me. So that, and then also Facebook. Facebook's a good avoid at this time too, because after this gap lower, not all gaps get filled, at least not right away. And this is saying that there were big sellers here. It's it's stuck below the 50-day moving average. Best case scenario is that it needs some time to heal. Worst case scenario is that this is a bigger issue here with that gap, and we're going to come down and perhaps test that 200-day moving average near 70 bucks a share. I hope it was a good week of trading for you guys. I do have a webinar, free webinar that I'm doing with Trader Planet next week. I will have a link to that on the website. It'll be a free educational webinar. And also, if you haven't taken a free trial to Alpha Trends, go to alphatrends.net. I know a lot of you view this on YouTube, but go to alphatrends.net and take a look at the 7-day trial. I promise I will educate you and bring you consistent money-making ideas and keep you out of trouble as well. So have a good weekend, and I'll talk to you next week.